going on, everybody? Welcome to Now Stock Trades. How's everybody doing today? Okay, happy Friday. Happy Friday. So a couple things that I want to discuss today. We have a lot to talk about. Not really, honestly, but really the main thing is we're going to go ahead and talk about the new upgrade that we just did regarding the financial data and analytics metrics chart. This is by far the most powerful tool in your arsenal, in your toolkit. I mean, this is just incredible. We've added an enhanced AI analysis feature and a whole bunch of things. But I think right now I would be remiss not to talk about the overall market conditions. What's going on, Clover to retirement Friday night special? Best way to spend Friday. Let's go. How are you doing, the Messiah? Oh no. All right, guys. Love you guys. All right. So you can see right now the VIX is up 15.84%, indicating that this is definitely a big scare. And I hate to say this, but technically, from a technical analysis perspective, we did do some damage today. So this is pretty bad, right? This is actually very, very bad. So now the answer is Monday, right? Monday. Monday is going to be the overall, if we don't recover, then we're in for another deep downside, right? And we've talked about this. We could be getting a double bottom on Clover. We've talked about this, but given remember, guys. So I have this company, Al Stock Trades, right? I am a institutional supplier of data, so I sell data, right? I also now sell data to hedge funds, which is pretty cool. But what I also do is I also have data that I can't share. I have a singular use license because I can't afford to share that data because it's expensive. But I use it for myself. But I'm still able I'm still able to share it with you, given that it's in my own context. So just think of me as someone who has an ear in Wall Street in New York, where I'm able to listen to what they're talking about. And right now, Wall Street's not happy. This technical damage right now was due in part regarding Trump's auto tariffs. And immediately after him doing this, the market really, really attacked him. And then within literally 4 hours, he's realizing that the market will fight back and will literally drop us to the ground to where it will literally affect. So immediately after the market pretty much slapped Trump today, Trump says he is willing to make deals on tariffs. He's showcasing his hand right now. He got slapped today. And right now the market needs to recover, because if not, we're going to have some technical damage. So the market's at a critical point. We had a big market drop for Friday, especially in QQQ and semiconductors. If stocks bounce back Monday, we will see a recovery. But if not, there'll be more downside. Holding above March low is crucial. If those break, then we could have a deeper pullback. So this is the big one here. Okay. So this is what Wall Street's, slapping Trump with, right? So that's what I have for that. Let me drink some coffee. Mm-hmm. So there's that. But now let's go ahead and let's talk about this upgrade. Okay. So now, this is the financial data and analytics metric chart. A long time ago, unfortunately, Morningstar used to have this, but they removed it. It's funny because now they don't even give it to their paid members. It's now only available in Bloomberg terminals and in some forms as well. But the issue is ours now has a couple new features. So let's go ahead and open up Tesla. So you can see how beautiful this is, right? Let me go ahead and zoom out. So here's Tesla, and you could see the graphs, and when it turns a little green box here, it shows that it's for the first time free cash flow positive, which then it goes ahead using our AI summary. It shows operating cash flow 2018 turned positive, free cash flow 2019 turned positive, net income 2020 turned positive. And the cool part is let's say, because again, my whole point of when you purchase the lifetime access to the mastering, you're not only purchasing software, you're also purchasing a course. So the goal is to essentially be able to take you from zero to hero. And like, for example, if you forget what free cash flow means, now all you have to do, you see these are new little question marks. all you got, first off, if you click on this, it'll highlight it for you. So it'll allow you to easily to read it. But now if you click on this question mark, you'll see this little box that pops up. Very beautiful, elegant, Apple style box that pops up. Very elegant. It's a free cash flow. It gives you the definition of free cash flow. It says, free cash flow is the cash left over covering operating costs and capital expenditures, often used for dividends, share buybacks, or debt repayment. And it gives you the overall formula, for the FCF is equal to operating cash flow subtraction from CapEx, right? And then CapEx is right here, right? Which then it says, capital, and then it says, funds of So again, the point is it gives you definitions. Like here's for example, most people don't know what working capital is. Well, working capital is the difference between current assets and current liabilities, reflecting companies' liquidity and short-term financial health. So what it does is it takes working capital is equal to current assets minus current liabilities. So if you have a company that, let's say, company A versus company B, if company A has higher working capital than company B, then obviously company A has more to work with, right? They have more assets, right? These are all metrics that are used to allow you to essentially find your 10 baggers, right? So let's give you an example. So obviously, from our automatic, again, this uses a large language model that I created that goes ahead and takes this data and synthesizes it in an easy to read, understandable language. And the beautiful part is you have this new button called Enhanced AI Analysis, which I'm going to show you right now. But first, let me show you this part. So, you could see that 2018, it turned positive, and 2019, it turned free cash flow positive. So you got a signal, 2018 was a good signal to buy the stock for Tesla, right? So if you go to Tesla back in 2018, you could see the stock was around $20, right? And all of a sudden, literally shot up, right? Now, if you think that this is just a one-off, well, okay, fine. Let's do Palantir. Palantir 2021 turned positive. Free cash flow 2021 turned positive. Net income 2023 turned positive. Okay, let's go Palantir. Okay, here's Palantir, and here's 2023, and then look at it now. 10 bagger. Okay. All right, let's go ahead and use AMD. We use AMD. Our AI summary analysis analyzes the charts and gives it to you automatically. Operating cash flow turned 2016 positive, then 2016, then it turned negative in 2017, but then it turned positive in 2019. And net income 20. So 2018, 2019 was a good time to get AMD. So you go to AMD, you go to 2018, 2019. There it is. So right here, great time to buy, right? But the problem is 2016. 2016 was a good time to buy. So here's 2016, $2. The question now is, could we have found a signal that would have given us even lower, right? Let's look at Enphase. Enphase here, it literally exploded. Now it's falling, but could you have captured this explosion? Okay, let's look at Enphase. And then you look at that now, operating cash flow turned 2018 positive, 2019 turned positive, free cash flow, net income turned 20. So 2018 was the earliest signal. So right around here. So around like $4. The problem is do you think we could have gotten the 70 cents? So this is where the AI analysis comes in, the enhanced AI analysis, right? So yes, the answer is yes. Now it gives you 2017 signals, right? So 2017 in May, the stock was 72 pennies. See how now you're able to catch it early? So before we get ahead of ourselves, let's go back to our original example. Let's go to Tesla. So now that you have all these things, you have the question marks where you can understand what the hell this is. You could graph, for example, the revenue of Tesla. You could see how beautiful, elegant the revenue is. It's stagnating now, right? Look at the gross margins. You graph the gross margins, stagnating. You can go ahead and do operating cash flow. Went up, kind of fighting now, right? And you can look at spending, right? How much they're spending. Okay, they're spending a lot now. What are they spending on? Robots, maybe? I don't know. So the point is you have this diagram, right? So now let's go to the Tesla chart. And let's see if we can find some patterns. So now let's go ahead and do the advanced AI analysis. Here's the enhanced AI analysis. And I'm going to move this a little bit here and make it bold. These are little tiny things. But you can see now is, okay. So because this may look gibberish to you. Because you see like SMAs, you see Z-scores, you see calculated differentials and all these different types of things, right? Sine flips. So what the hell is this? Okay. So let me explain to you. Okay. This is by far some really strong financial engineering. So what we're doing here, and I can't basically tell you exactly how we do it because this is proprietary. But what we do is we have a large language model that I created, that I trained. And what essentially we take into here is we take this data, this 10-year data of Tesla, okay? And we go ahead and we input and we spread out the data, both for the quarterly and the annual. So if you go ahead and do quarterly and you enhance, you also get enhanced quarterly data analysis, right? So what we do, let me just go ahead and go back to the annual here. Okay, good. So what we do here, ladies and gentlemen, is we take the overall spread of the financial metrics, and then we go ahead and we have AI essentially look at any discrepancies and any changes to the upside or downside, right? And think of it like a drug dog, right? It's able to sniff any changes that occur. But this is not no ordinary drug dog. This is a robotic drug dog. But instead of sniffing drugs, it sniffs any changes of all these metrics: revenue, gross margins, operating income. And what it does is it goes ahead and grabs the baseline of the company. Like, for example, let's say you have someone who's healthy, whose heart rate's always 70 heartbeats per minute, right? All of a sudden, you have this AI that's consistently monitoring this old man, because this old man is rich and he has really good resources, like this how stock trades, right? What this AI does is, let's say one day his heart rate jumps to 90. Immediately, 80, 90 is kind of still normal, right? But since it jumped abruptly and it jumped quickly, this AI detects it and says, error, detecting error. We have detected a change in momentum. There's been a shift in the fundamentals. Okay. And it literally alerts you to a change in the underlying core of the business. Okay. The problem is this, if you were to do it on your own, would take you about an hour to 3 hours to 4 hours per company. Now it does it automatically with literally a slap of this freaking little button. Okay. Now you understand why this platform is going to eventually cost $25,000, because this does not exist. Okay. You know how wealthy, like, imagine if you had this in 2010. Oh God. Right. So now let's go ahead and let's run the analysis for Clover. For Tesla. And let's see what we get. So we already know that 2018 was a good time to buy. Right. But the thing is, could we have, gotten anything at $15? I mean, this thing used to be $12, right? So if we go ahead and do this, we see in 2016 something happened. In 2016, we see a sign flip. Okay, the working capital increased by 1,590%. So working capital is the difference between current assets and current liabilities, reflecting a company's liquidity and short-term financial health. So all of a sudden, if you look at the working capital here, it used to be a negative 29, and it literally flipped to 432 million. Obviously, it went down low, but there's other metrics that changed that improved, most likely, like revenue and whatnot. But you could see something happened. Something changed. Elon did something. Why was the working capital higher? So it gives you a signal, and this increased by 1,500%, right? So let's continue. 2017, cap spending increased, which means that they started spending more money on their business. The PE ratio increased, meaning that someone did notice this, and the stock price went up, right? So I bet you in 2016 something happened. So let me see. So 2016, something happened, and then guess what? The stock price jumped. Isn't that funny? The stock price used to be like $12, and the stock price jumped 100%. See? Because I bet you a lot of hedge funds already had this technology, but they don't share you this technology, right? But now you do, okay? So it detected a change, and this change from a fundamental perspective was detected, and then we're able to do this. Now, my next goal is to go ahead and wrap this to give you the overall history for the quarterly for the past 10, 15 years, but honestly, you don't really need that, so it'll be data overload, but you could see something happened, okay? So let's continue to 2018. Let me drink some coffee. Okay. So 2018, revenue increased by 82%, right? And you could see the Z-score, 5.11. So we could go ahead and let's go ahead and do this.
Revenue USD nearly 2.51%. Z equals 5.11.
Let's go ahead and do that. And let's exit out of this. And let's go ahead and put this here. And let's basically say, what does the Z score mean in the text below? We can ask our own stock terminal just since I already have this up on the window. Okay. So it says here, a Z score of 5.11 means that the revenue growth, 82.51%, is 5.11 standard deviations above the mean. So what does this mean? Okay. It basically means that it's 5.11 is very high, significant above the norm. Just like I told you about the heart rate. You have a good, healthy man whose heart rate's normally 70, and all of a sudden their heart rate jumps up to 80 or 90. Yeah, I get it. It's still normal. But the problem is it jumped up too fast, and you got to detect these changes. And that's what's happening right now. Our enhanced AI analysis is detecting these changes. So it says here, 82.51% revenue growth is not just good, it's outstanding, statistically speaking. Okay. So now that we kind of understand this, let's go ahead and go back. So 2017, you could see that the Z-score is 5.11 times. I'm just trying to teach you how to interpret this, right? You could see there's a lot of statistical methods that's happening in the background. And we have our generative trained transformer that's able to transform the data and give it to you in an easily digestible manner. I'm telling you right now, none of this exists. None of this exists in Wall Street, right? In terms of what retail investors can have. Okay? Like, you have to work on a hedge fund and then be able to have this information. We're giving this information to retail investors. I'm showing you the data that I used to get access to when I have a lot of resources, okay? For people that know who my future father-in-law is, I have a lot of resources, right? So with this now, we're democratizing what resources I have, okay? I don't want to say too much, right? But when the great financial crisis happened, my future father-in-law, what he did is he purchased a lot of banks that went under distressed, right? Banks all over the country. And with these banks comes resources that banks have that I have access to, okay? So what I'm trying to do is I'm trying to democratize this information to all of you, right? So what you can basically see here in 2018, the revenue increased by 5.11 times. So that means the revenue increased 5 times normally than the history of the increases that Tesla has ever seen. Okay. Gross margins decreased, right? We have operating income increased. Operating margins increased. I need you to remember this, okay, regarding income, because something like this happened for Clover, okay? Net income increased. Earnings per share, even though in 2018, net income was still negative, almost negative $1 billion. But look at the change. It went from negative almost $2 billion to negative $1 billion, right? You could see the again, we're calculating changes, okay? The different way of looking at things, and it allows you to really hone in, and this AI helps detect it for you, okay? This is an incredibly powerful tool. And remember, you still have the quantum charts, right? And then you have the quant flow too, and don't forget you have the market sentiment intelligence, okay? There's a lot of data that you have now, and I'm very, very excited. Why do you think we increased prices, right? So congratulations to all the lifetime access members. Congratulations to all of you, right? All right. So operating margins. Again, if you forget what that means, you just click on it. You click on it. There it is. Here it is. Easy. Okay. Operating margins increased literally almost more than 2x. Net income increased in terms of the percentage by 1.5x, right? Earnings per share went up in terms of, again, it most likely it's still negative, but still it's going in the right direction, right? We got shares 2.92%, which is negative 9.1, meaning that let's look at shares. So something happened with shares. Let's see what year is this? 2018. So they didn't. Let me see here. Yeah, so they didn't increase as much as the normal because you can see the shares were increasing a lot. You see the shares increases here. So the shares stopped increasing as much. So you could see the shares started slowing down. Yes, it was an increase of 2.92%, but the Z-score wise, it was still below. That means they stopped diluting shareholders. Operating cash flow, we got a sign flip. It went up 3,539%, meaning that now it's operational cash flow positive. Then you have, so you see how it gives you sign flips? It means it went from negative to positive, right? Which is what the sign flip is here. Operating cash flow 2018 turned positive, okay? Then you have cap spending, which went down, which is good. That means they stopped spending. Free cash flow per share went up. Okay. PE went down, meaning the stock was going down, which is good, right? So then now let's look at 2019. Revenue went up by a little bit, not too much. So let's see what happened. 2018, 2019, not too much in revenue. So let's graph the revenue between 2018 and 2019. So here's 2018, here's 2019. Not so much increased, right? But still, to a point, it was able to increase, but still below. Okay. So what do they do? Just like Clover. You remember how Clover decreased? You remember Clover went ahead and didn't really increase a lot in terms of revenue. So what did Clover focus on? Right? Income. So look at operating income. 82.822% increase. Operating margins, 84% increase. Net income, 11.68% increase. Earnings per share, 13.16% increase. Book value per share. So just they started focusing on profitability between 2019 and 2020, right? And then now you have free cash flow finally turned positive, right? Which is what happened with Clover Health in 2024. We had a sign flip increase to 538%, right? So now let's see what happened in 2020. Gross margins increased to a point where it's 5.30x the standard deviation. Operating income now, we have a sign flip. Now it's 2,989%. Operating margins sign flip. Net income sign flip, meaning that now it's positive, right? Which you could basically see here if you follow net income. Where's net income? Net income is here, and it literally went from negative to positive between 2019 and 2020. The problem is you see how rugged this data is, and I'm trained because I've been doing this over 10 years. I can analyze this quickly, but the problem is newcomers, they don't have these eyes, right? Right? They don't have these eyes. So now you do, right? Now you have the eyes of the AI. Okay. So okay, what else? So there's that. Then, but then also let's say things turn negative, right? So let's go to 2023 for Tesla. So 2023, for example, let's look at free cash flow. So gross margin started to go down. Okay, revenue went up 18%, but still down negative 1.83%, meaning that they are slowing down, right? Gross margins are going down. Net income is up, okay, but still not as up as it normally is. Earnings per share is up, but not as up as it normally is. It's in the negative standard deviation. Shares are up 27.57x, meaning that in terms of the standard deviation, meaning that this is different. Operating cash flow went down. Free cash flow per share went down. So something happened in 2023. So let's see what happened. So here's 2023. And all of a sudden, you see this huge dip, literally dip down, right? Right. And then all of a sudden, we went here, and then so the question now is what is Tesla doing, right? Now, if you go ahead and look at the CapEx spending, you could see CapEx has gone down, it's increased to a level that I've never seen before, to the history, right? So why are they increasing? What are they doing? Could it be robotics? Could it be their robo-taxis, right? So anywho, the last time there was a spike, it was 2017, right? So I think Tesla's getting ready for its next round of growth. The point is, you see how it tells a story? Let's go ahead and do Palantir real quick, okay? So you do enhance AI summary, and you could see 2020 book value sign flip, but the thing is cash flow was negative. Gross margins increased. They started becoming profitable on this metric here, getting closer to profitability. Free cash flow, we got a sign flip. It finally turned free cash flow positive in 2021. What else? Operating income. So you can see it's starting getting better. CapEx. Okay, here, look at this. They started 52x more than the standard deviation, meaning that now their CapEx spending has increased by a lot. So in 2022, so let's see. Look at that, -12 to -40. To you, this means nothing, right? It's like, okay, I don't know what that means. But now you could see that the CapEx started spending a lot. So you could see how it's able to catch that rather than your eyes can't. It's just hard for your eyes to figure that out. All right, let's see what else. Okay. Here's the revenue. Revenue went up, but this is where it starts getting crazy. Operating income, sign flip, sign flip, sign flip, sign flip. All right, imagine if you could do this for SoFi, right? Operating cash flow, right? CapEx spending went down now, so now they're starting to not spend a lot, right? Look at free cash flow, up 2.16. Free cash flow. So are you starting to see what I'm saying? So You could see price to sales ratio went up by 2.36x. Could that mean, maybe this might be overvalued now, right? You could click here. What is price to sales? It's the ratio compares the company's stock price to its revenue per share. A lower PS may indicate better value, while a higher ratio could suggest expected growth or possible overvaluation. How you calculate is the price per share divided by the revenue per share. See that? So see here, this is powerful, guys. So now let's go and look at Clover. Right? So Clover turned operating cash flow and free cash flow positive in 2024. Let's go do the enhanced AI. So in 2020, gross margins went up by a lot. Operating income went, so they were pretty much about to flip the free cash flow positivity, right? So you can see here, 2018 to 2019, you could start to see it went from negative 159 to negative 2. Then income-wise, they became better to a point where we thought that, you see how this here looks a lot like this? We thought they were about to flip, but then all of a sudden they didn't, right? And I think this was the ACO issue, right? So that's where, if you look at the stock price, it was really well. I mean, Bank of America had a price target of 15, 17, right? You remember those days? So what happened? So in 2021, gross margins fell. We had a sign flip. Operating income fell by negative 25 standard deviations, meaning that it was going to hell. Operating margins went to hell. Net income went to hell. Earnings per share went to hell. Book value, sign flip. Okay, that's good. Operating cash flow, it went to hell. Negative 249x of the standard deviation. Negative 12,576, meaning that operating cash flow went to hell. Cap up spending went up. Free cash flow went to hell. Free cash flow per share went to hell. Sign flip, right? Working capital increased. That's good. But the thing is, it became incredibly overvalued. But at the same time, free cash flow went down. Okay. So then now it was, okay, was ACO going to save them? So now revenue was backed off in negative 25%. So they dropped revenue down, negative 3.61, standard deviations below. Gross margins went up, sign flip. Who the hell did here? Who helped them? Scott. You remember Scott? Was it Scott Leffler? Scott came in, right? Scott came in. He said, I'm going to bring this to profitability. Gross margins went up 275%, sign flip. Operating margins went up 55%, 1.16. Operating margins percent went up 39.59% improvement. Net income 1.30, standard deviation up to the upside 42.23%. Earnings per share went up. Book value went down. Operating cash flow got better. Free cash flow got better. You see, working capital got down. Now, 2023, gross margins got even better. Operating income got even better. Why do you think I was bullish? I was calculating all this. If you look at my other videos, I was like, this company's getting better and better and better. Free cash flow is improving by 44.12%. Okay, but you're looking at it like, Al, it was negative. Okay, I understand that, but it's less negative. Look at the improvement. Okay. Right. And the calculation, it doesn't just do year over year. It does the whole analysis, right? It takes all of the, again, it's proprietary. It's incredibly smart, right? So then now all of a sudden, what happened in 2024? You might be asking. Operating income, 77.72% increase. Operating margins, 79.52% increase. Net income, 79.84% increase. Earnings per share, 82.22% increase. Book value, up 17.21%. Operating cash flow, up 130.07%. Sign flip to the positive side, meaning it went from negative operating cash flow to positive operating cash flow. Free cash flow up 128.59%, sign flip, meaning that went from negative free cash flow to positive free cash flow. How many times did I tell you about free cash flow going from negative to positive, right? So what is free cash flow? Free cash flow is the cash left after covering operating costs and capital expenditures, often used for dividends, share buybacks, and debt repayment. Formula, FCF. FCF is equal to operating cash flow minus CapEx. Free cash flow per share up 129.17%, sign flip, went from negative to positive. PE ratio, it went down, meaning that the stock went up, right? That means it's still unprofitable. Price to sales ratio went up by 7.82%, indicating that it is reflective. People are noticing these changes. Okay? So now you're starting to see that this little table metrics chart, there's a lot of data extraction that my mind has done. Remember when I used to open up the Excel spreadsheet and graph it for you and show you the percent increase? Let me give you an example, okay? Let's look at NVIDIA. Something happened in NVIDIA. See this big jump here? What do you think? Do you think our enhanced AI figured it out? Of course it did. Look at the free cash flow here. It jumped up 662% in 2024, right? The free cash flow went up insane levels. So what do you think happened to the stock price? Okay, let's see. NVIDIA. Something happened between 2023 and 2024. Here's 2023. It was around $11. This is adjusted from this. They did a stock split, right? But look at it. It's up 10x. And we called it when it was down here below. Remember? It's on the mastering video. I know it says $117 in the mastering video, but that was before they basically did the stock split. Okay? Anywho, this is the power of our stock trades. Are you starting to see what I'm talking about now? Are you starting to see how this enhanced AI metric literally breaks it down and shows you any changes that are humping, that are humping, right? That are happening in the background. Okay. So now that you have this, comment down below. What do you think? You might have to replay this video a couple of times because I did go fast, but now you have AI by your side, guiding you, showing you, right? Showing you what's up. So if you have a ticker symbol you want to put in, you know where to find us. God bless you all. Have a good weekend, and I'll see you on the next one.